Before we begin, here is the disclaimer. Market returns are never guaranteed. But when we do the fundamental and technical analysis, then we get some edge in the market, but risk management cannot be ignored. Hello and welcome to DK Global Market Insights. This is your 360-degree US market analysis, which comes every Saturday at 7:30 p.m. Eastern Time. It keeps you fully updated on what really matters in the US markets. Never miss it. In today's video, we will look at how the S&P 500 and Nasdaq 100 and Dow performed. Compare this week with last week. Check global market trends, study market sentiments using fear and greed index and the VIX analysis. Review news like Fed's rate cut, and finally move to the charts for detailed technical analysis to understand price action. Let's begin. Market performance recap. This week, US markets continued their positive momentum, though gains were slightly lower in comparison to that of prior week. The S&P 500 gained around 1.22% compared to 1.59% last week. Nasdaq 100 was stronger. It was up by 2.22%, better than last week's 1.86%. The Dow Jones also closed higher by 1.05% compared to 0.95% earlier. So overall, the US market had another green week with tech-heavy Nasdaq showing its strongest performance and outperforming broader market index S&P 500. Global markets snapshot. Now let us quickly look at the global markets. In Europe, the FTSE 100 fell by 0.72%, and Germany's DAX was also slightly negative by 0.25%. In Asia, Japan's Nikkei 225 gained 0.62% and Hong Kong's Hang Seng added 0.59%. India's Nifty 50 also did well, up by 0.85%. So while Europe struggled a bit, Asia and India were positive, showing that the risk appetite is still alive in global markets. Market sentiments. Let us move to sentiment indicators. The fear and greed index is now at 62, which is a greed zone. Last week it was neutral at 54, so sentiment has clearly improved this week. Volatility measured by the VIX closed at 15.46. This is still low compared to the neutral band or usual band of 12 to 33. But interestingly, VIX went up by about 4.8% this week. So while the markets are calm and sentiment is positive, the rise in VIX shows a little caution entering the system. Institutional and market breadth. Now let us see what institutional and market breadth data is telling us. The number of stocks hitting 52-week highs is much higher than those making new lows. This shows broad market strength and is classified as extreme greed. The put-call ratio is at 0.57, also an extreme greed zone. This means traders are buying more calls than puts, showing high optimism. In simple words, too much optimism sometimes creates overconfidence in the market. Market momentum. Momentum continues to be strong. The S&P 500 is trading well above its 125-day moving average, which confirms that the long-term uptrend is still intact. So both momentum and trend are in favor of bulls. News and macro update. Let us also look at some important macro news. The Federal Reserve has cut interest rate by quarter point and signaled 2 more cuts this year. Lower rates usually support equity markets as liquidity improves. But on other hand, the 10-year Treasury yields actually moved up to 4.12%, hitting a 2-week high. Rising bond yields often signal caution from the bond market. So while the Fed is supportive, the bond market is still showing some resistance, and that could limit the market upside in short term. Transition to the chart analysis. Now that we have covered performance, sentiment, and key news, let us move to the charts to understand technical analysis, price action analysis, support and resistance levels for both S&P 500 and Nasdaq 100. This is the weekly price chart of S&P 500 index. The index finally closed this week at 6,664.36, and hence it was bullish and up by 1.22%. Look at the price action. This is the continuation chart pattern breakout over here. This was the neckline of this continuation chart pattern, and now the price is going up continuously. If you look at the price action very closely, there has been a loss of momentum over here, but finally it came out of the consolidation band and give a breakout. So as such, there is no problem in the trend itself. Now let us go to the daily price chart. If you look at the daily price chart, what you see, the minor correction is taking place, and whenever there is a pullback, price is taking support at EMA 21. That is very significant. So the trend is so strong that EMA 21 is acting as a dynamic support, and whenever mean revision takes place, EMA 21 comes to the rescue of S&P 500 index. Now, where is the immediate support? Look at the price action. There is a formation of some kind of doji over here, and if I draw a trend line like this, can you imagine this kind of trend line? So there is a breakout of a rising wedge. This is the base of the rising wedge, and this zone becomes the important demand area. So if I superimpose some of the technical studies to further study, this is the rising wedge. So zone between the two trend lines forming the rising wedge is the demand area. And if you closely look, EMA 21 is coming to this level. So based on this study, 6,532, 6,587 becomes the important demand area. From where the 6,587 came, look at this candlestick pattern. This is a bullish kicker candlestick pattern which got finally formed on 11th September 2024. The closing of this candle is 6,587.47. So that itself becomes a good support intermittently. Yes, price is little overextended. So likely structure is likely to be like this only. Higher highs and higher lows kind of market structure in near future. Now this is the weekly price chart of Nasdaq 100 index. The index this week closed at 24,626.25, and thus it outperformed S&P 500 and finally was up by 2.22% on week basis. Here too we can find some kind of rounding pattern and a breakout over here. And if you see the neckline of this rounding pattern, there is a placement of EMA 21 over here, which itself will act as a dynamic support. And there is a price consolidation over here, which acted as a resistance. So this becomes the immediate demand area in Nasdaq 100. Let us go to the daily price chart to understand the recent price action. If you look here, the zone between EMA 21 and EMA 55 is acting as a dynamic support over here. Now look at this gap. This gap is the intermittent support in Nasdaq 100. Look at these price actions. I have drawn some of the lines over here to represent the price action. This is the rounding pattern kind of a structure. So this is nothing but the cup and handle continuation chart pattern with respect to the prior uptrending market. And there is a placement of EMA 21 and volume weighted moving average. So major support is 23,700 to 23,860. However, there is an intermittent support also. Can you see here existence of a gap at 24,292? That becomes the intermittent support in Nasdaq 100. S&P 500 has rallied strongly from low of 4,835 in April 2025 to 6,664, while Nasdaq 100 has moved up from 16,542 to 24,626 during the same period. This itself shows a strong control of bulls in the market. The trend remains bullish and the likely market structure ahead would be higher highs and higher lows in the markup phase of the market, with mean reversion whenever prices become overextended or overbought. If you want to learn how to do the market analysis step by step, visit our main channel DK Sinha and explore Zero to Hero in English tutorial series for structured learning. Remember, learning never stops with DK Sinha.
Let's start with this stock market 101 video.
Good idea. It covers the basics.
Yeah.
Yes.
And then maybe the common mistakes one.
Yes.
Yeah.
So we avoid those.